Broad market cycles and your own life cycle may not always line up, like investing your inheritance at the peak of a bull market, or on the flip side, incurring an unexpected expense at the bottom of a bear market. That's okay, and in fact, it should be expected. Your life shouldn't always wait for the market. Today we'll talk about the recent stock market bounce off the bottom, get real with the real estate market, and bring it all back to the basics. The US stock market peaked around the start of 2022. Since then, we have seen some rather swift price swings both up and down. Thus far, June 16th marks the low point for the year. The stock market was down about 23% off the January highs. Now, this level of decline by many is viewed as a bear market. Now, since that June low, the market has increased. In fact, it's up about 18% from its lows set back in June. Of course, we can't know if that was the bottom for the year or not. We expect uncertainty. It's the main reason we use a bucket-based approach to plan and invest. Rather than trying to time the market, we diversify investments, creating separation between short-term needs and longer-term goals. Now it's time to get real with the real estate market. The National Association of Home Builders, or NAHB, surveys industry professionals and puts out a report each month. The report forms an index that can be used to monitor the pulse of the single-family housing market. The index has signaled a slowdown in the housing market, a steep shift in sentiment. It's no surprise that existing home sales have declined from December highs. Rising interest and inflation rates are part of the story. Median home sale prices declined as well recently, but we should keep in mind some seasonality on this data point. Looking ahead, new housing starts, or the number of new homes expected to break ground, is lower month over month. Let's now pull on the thread of how we got here. For one, mortgage interest rates have jumped higher this year. The cost of borrowing for a new home purchase has increased from around 3% late last year to above 5% now. This can make a material impact on the monthly payment for a new mortgage. Although home prices have declined here recently, it's important to remember just how much home prices have increased over the past few years. It's about 50% since pre-pandemic levels. Getting into market cycles and your in real life cycles, entering and exiting an asset such as stocks or housing can be nerve-wracking to correctly time. Correct, we believe, is a continuum. Timing the exact tops or bottoms is nearly impossible, as these are often just brief moments in time. Markets, whether stocks or housing, go through cycles, and these market cycles may not always align with the demands and opportunities in your life. Again, that's okay. We believe having a plan for the future can help you get today right.